morning, fellow option traders. This is Jeff, and welcome to the daily scan for Monday, May 13th, 2013. Well, it looks like it's going to be kind of a busy week, especially Wednesday. There's the potential for some big market movers, and also on Thursday. So, should be a fun week. Today we have retail sales and business inventories, and then treasury bills announcements, at least I think initial returns or interest rate or something. I don't know. I don't understand treasury bonds or bills or whatever you want to call them, so not into them very much, and I have a hard enough time understanding the market just in general. Take a look over here. Looks like as though we will be opening down, and whether that trend will continue or not, well, we just don't know, do we? But the confusing thing here, traditionally, when I went into this simulated hedge play here, what I was looking for was gold to go up if the market went down. And what used to be normal is no longer normal. So is this the new normal, or is somebody messing with the gold market? I don't know. Maybe there's just a lot of players or something. I really can't figure it out. Oil is pretty close to 95, which is, it's been hanging out there for quite a while lately anyway. If we take a look at our positions, just our regular iron condors and credit spreads, overall we're up, and I'm not going to really focus in on any of these right now. We'll just keep the recording short for today, or at least shorter than normal. So if anything, well, this Panera's down a little bit, but this is a recently entered one, and price hasn't moved favorably on it, although I'm sure it's still well within its parameters. We're looking, Panera closed at 181, and we're sitting at 170 with this put, so we're very safe. My guess is that last week Panera didn't really move up very much. I could take a quick look at a chart on that, I guess, and see what we did. Alright, so we entered this here, and then price moved down a little bit, and then it took a bounce up on Friday. And actually we're looking for a double trade here, and we'll catch that probably on the scan. But we could cover it now. We'll just skip it on the scan. We're looking for the stochastic to move down here, and it will if it's just price remains flat. It'll come down here and give us a chance to enter again. So we were looking at a longer term trade here on the weekly chart, and this one would be based on information that we have on a shorter time frame or the daily chart. Alright, let's do our scan right away. Knock this out of here. I could get a little bit better response if I don't have so many quotes sitting up there, even though the market's closed. Apple, we were thinking about doing a bull put here, and that would have been a chase of a trade actually, because none of our indicators are really giving us anything. But we're also looking for a real live one. We have a target set down here. We'll see what happens with that. So nothing showing at this time. New trend reversal. Let's get rid of this little arrow. Not a very steep trend reversal, and it will flatten out if this continues to hang around here. I like them a little bit steeper, but when we're entering in right away after the trend reversal, a lot of times it's just not very strong at that time. Amazon. Alright, we have Iron Condor on it right now. A June Iron Condor. Do we have anything? It's pretty flat right now. Not interested in a darn thing on this at this time. Don't want to overextend into anything. I think we're pretty heavy in the market right now. Alright, Baidu, we currently have a bull put on it. Trend reversal. Bull put off of the weekly. So we're not going to be messing with that anymore either. No indicator for any new entries on that. Celgene. We're still observing Celgene. It's definitely in an uptrend. It's nowhere near looks like it's ready to come down here and hit this thing. And questionable possible entry on a longer term weekly chart. But that was not a good one. CF Industries. Let's see here. I was looking at May bear call and then maybe another May bear call here, and I think we're going to end up with a trend reversal here on CF Industries, so not looking for anything there. I'm just going to delete all drawings and start fresh with this one. I think we're going to end up with a trend reversal. If, of course, if things continue, or they could not continue. Somebody said, you know, what's your bias on the market? Well, it could go up, it could go down, or it could stay the same. I don't know. Chipotle. We had an alert set on Chipotle that did not trigger. But I'm going to leave that alert in there. If it triggers today, I'll get in with a bull put. Google. Okay. My test Iron Condor would have been fried here. But chances are it would probably have gotten out and probably would have lost a little bit of money on it in reality. So that would not have been a real good play. Probably would have gotten out around here just because it looked like it was booking. So I'm not going to go back and look at this historically or anything. It was just fun to look at, so we're going to delete all this stuff off of here and start fresh with Google and look for some place to get in. Okay, Goldman, too flat for anything right now. Potential possibility after I watch this, maybe next month's Profit 10 portfolio for an Iron Condor on this. We'll have to see how that works out. LinkedIn. I was looking at doing a bear call here. And then looking for a bull put here. But it failed miserably. And we might be looking at a trend reversal here, so I'm going to take this alert off of here, and I'm going to delete only that drawing. Still want a little focus down here on this one, because who knows. MasterCard. Alright, we have, we're in this two ways. We have a June Iron Condor and a June bull put on this. This wick on this candle, this downward wick, is a bad tick because you're not seeing it over here on the intraday 78-minute chart over here. You're only seeing it here, and you're also seeing it on the weekly. So, bad tick, don't pay any attention to that. Actually, this was the low 552 was the low on Friday, so we're looking good on that for the bull put, and still looking pretty good with the iron condor for June at this point. Could take a look at here we go. We have a delta of 3, -3. That's a pretty good delta. Alright, Netflix. We have a bull put on Netflix. Looking pretty good right now. No other entries, so nothing there. Priceline's going ape off of their earnings, so well, good for them. It's not giving us any entry though. I'm going to get rid of all the drawings on that as well. Panera, I think we already covered that, so we can just move on. And last but not least, but I'm not done talking yet, but Visa, looking to see if we can hit this target down here, but we may not. We'll have to keep an eye. This is sort of a secondary entry for another position on this. We're already in with a bull put, so we'll keep an eye on that one and then look for other opportunities, but nothing as of today. And then one last thing from my video yesterday on the double calendar on the Russell, and you'll have to watch that one. I'm not going to cover it here again, but I'm looking at this double calendar for July, August at 900 and 965. And looking at it from a risk profile perspective, again, this is an insurance policy, and I'm not going to mess with this one. I'm going to spend a little bit over $1,000, $1,165 it would cost for this if it totally does not work out. But the nice thing about it is when you get to the July expiration, there still may be some money left in these in the longs. So if you just, close the whole thing the Monday, or sell your longs the Monday after expiration, then you at least get something back on it. So that's what I'm looking at. I will be looking at it this week. If the market moves down a little bit, I'll tweak it down with the market. But otherwise, I'm looking to do this again, and this will be the only insurance policy that I'm going to do. The only hedge or insurance policy across both accounts. And I may do one in each account. So remember, just a reminder, and I haven't mentioned this in a while, but I usually hang around 40 grand in each of my two accounts, and if they go up, I usually peel something off. So I like to keep them right at 40. It keeps my position sizing the same. It keeps things simple for me, and I take my profits and move them into my long-term ultra conservative fund, or I just take them out and blow it on fun stuff. Now that I'm retired, or at least older than 59 and a half, I can do that because they're both IRAs and I don't have to report any tax stuff on them until I take the money out. So my gains are my fun, and I have fun once in a while, believe it or not. Okay, so that's it for today. Thanks for watching. Have a great day and happy trading.